Hello everyone and good morning and welcome to Friday the 13th. It is my morning report chart appraisals with me, Richard Perry, market analyst at Hantec Markets. We have got a sort of theme of still dollar negativity, I think, today. It's interesting that what we have seen in the last few days or last week or so is this continued sort of decline on the dollar as these treasury yields, well, certainly on the 10-year have dropped away. The 2-year remains fairly strong. And it is interesting that that sort of 2-year holding up has again flattened the yield curve. The 2s10 spread falling away quite sharply this week. And that is sort of reflected in the moves on the forex markets with pretty much across the board the dollar coming under pressure, although interestingly the euro is dead flat pretty much. As the only major not to really perform that strongly against the dollar, but certainly the moves in the markets would suggest that the dollar is still fairly much under pressure moving into the key data point of this week, or key data points I should say, which is US inflation and also retail sales. Now, equity markets are also fairly mixed. Nothing doing really on the DAX or the CAC, but interestingly that the FTSE 100 is underperforming as sterling is outperforming. So that negative correlation between sterling and FTSE 100 remains in play once more. So my data points that, as I said, I'm looking out for. Initially, just look here, the China trade balance, quite a sharp correction or deteriorate, I should say, contraction in the trade surplus has come as imports basically shot through the roof, interestingly. But US inflation is the big data of the day. Now, what we have got is an expectation of core inflation to pick up. Now, that is the first time, or that would be the first time in 2017 that would have happened. Sorry, let me just find my inflation chart. Hold on. Core inflation. And that's the first time in 2017 that would have been seen. So that is an interesting data point to look out for. And what we have got is also retail sales, but let me just show you that core CPI. Sorry, it took me a while to find it. Has been dropping away, but flattened off in the last couple of months. Expected to rise to 1.8%. Now that is interesting. So market will be certainly looking out for that. Is there some traction finally in this Phillips curve? We're also looking out for retail sales in the States as well, expected to be 0.3% for the ex-autos retail sales. So that would be a reasonably positive number if that were to be seen. And also we're looking at Michigan sentiment, which is 95, which would be mildly down from the 95.1, which was the revised number. This is the prelim number last month. So that takes me to my chart of the day, which is the sterling Aussie. Now, this is an interesting chart because sterling has been flying around in the last 24 hours on Brexit talk. And that is reflected in this sterling Aussie chart. Now, I sort of first identified this chart yesterday afternoon when sterling was sort of trading down around 168 on sterling Aussie. But subsequently, we have had a suggestion in German press that the EU is sort of preparing for a transition deal or transition agreement, shall we say, with the UK. And subsequently sterling strengthened quite strongly. But this prospective head and shoulders top is still intact. 170 big figure seems to be a basis of resistance. It has been throughout this week. And again coming in today. So 170 big figure is a basis of resistance. And what you have got is throughout this pattern, the RSI falling away, lower highs on the RSI. So that would suggest that the momentum is sort of waning out of this recovery phase, and we could still see this head and shoulders top formation coming through. Now, the hourly chart has, as I said, sort of recovered sharply yesterday afternoon, but the momentum indicators are still sort of relatively range bound, so that resistance, as I said, at 170 is important near term and remains intact. Now, it certainly looks as though the market is sort of trading a little bit uncertainty over the last sort of week really on the hourly momentum indicators, but if 170 big figure remains in place as a resistance, you could start to see sterling coming under a bit of pressure again, and that would be reflected in this market falling away again. We have seen the Aussie, which is starting to pick up generally against the US dollar. So if sterling can't sort of hold on to these Brexit-related gains and starts to drop away against the US, then you could easily start to see this head and shoulders top playing out. But I think this is one for the coming days, but certainly is something to keep an eye on, and it's something that I will revisit in due course, I believe. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.